Nvidia bubble is the biggest and highest PE stock in the S&P 500. And the US debt has reached $37 trillion. Now, this is going to be a big major issue for US, I can tell you that. And with this bubble right now, I'm going to expect some selling to come in for the next few weeks. So traders, you need to watch out for that. But before that, disclaimer apply as usual. Please do your risk management. All right, guys, something to take note now. Wow, look at it. The US debt clock has reached $37 trillion. This is really ridiculous. But then again, at 4% right now, they're going to pay $1 trillion on interest alone. My goodness, guys. This is not going to be a fun deal for the US administration, especially with Donald Trump. That's the reason why he really wanted to get this rid of digital power. And one thing to note right now, you can see that this is crazy because that is equivalent to $22 billion of debt, all right, because of the big beautiful bill. And of course, we know that the government is trying to sell a lot of treasuries, but the thing is this, that people are not coming in to collect. And right now with that, you can see the tariffs seem to have a different expectation and the consumers are getting very upset. And that's why you can see now the Russell 2000, we are seeing one of the largest speculators net position on the sell side on the Russell 2000, because we do know that the consumers will definitely be one of the sector to be hit. And of course, right now you can see the medium household income has already, the gap itself is getting ridiculously big, right? Since 2008, we have a big gap back then, the CDO crisis. Right now, the gap is extremely incredible. Look at it. The affordability itself has stretched such a far difference. And right now, that's why the US Treasury volatility has dropped so low, because everybody is too complacent. So everybody's buying shares right now to think that it's okay. But in reality, the income itself is not following through. And that's the reason why people rather, they stay in rental than buy a house of their own. So now the thing is this, people are getting pretty pissed off. I pardon the language, but I copied from the internet. And you can see right now, the things is getting more expensive. The cost itself for drugs, right? I mean, those medicines has got so expensive. My goodness, it's like usually it's like basically one half of the price right now. Now it's went up by 100 to 200%. So people are not getting able to afford this thing. And if you look at it right now, if you look at it in the past history, when Donald Trump came in, you can see that when the third time he did the tariff in 2018, the stock market collapsed. So right now, you look at it again, it's seemingly repeating it, very possible. And of course, the inflation right now is actually creeping up. The inflation right now is creeping up. You can see it's moving up this way compared with the world goods and services. And right now you can see that it has been always pretty, when they are too far away, that's where the market basically cracks. And half of the Americans that are being interviewed, they are very stressed out of the food costs. They are very upset with the current grocery costs right now. And the thing is this, majority of them thinks that it's a major stress for them. And obviously, so now the thing is this, people know that the US dollar is going to continue to depreciate because of interest rate going to cut further. That's why no one really want to buy the 30-year bond, because they know that they do not have the confidence for the US in 30 years time. And that's going to be the ominous sign for the treasuries market. And of course, the treasury kept on trying to sell. And the thing is this, based on what I'm looking at right now, I believe that the bond market will fall again. I'm very bearish on the bond market. I've been saying that every time when you hit the MA over here, it's always a good time to sell. So I believe that the bond market will go back down to 85, and that will basically trigger another round of selling to the market, because bond market not going up means that the market really wants higher number. And you can see that it's very soft demand right now at this moment, and that is a sign that people are not buying into that. So if that happens, the US dollar is going to fall, right? Then about 2 weeks ago, I told you that the dollar will have a big resistance at 100. I told you that in the last video. And I said that it goes down. It came down, and I believe they're going to go down further to 96.50. Now I'm a big bear on the US dollar unless something changed the whole demographic. If not, the US dollar to drop to 96.50 is a very high level. And if that happens, right, the gold price will go past 3,500. And that's another video for you coming up. So the thing is this right now, with the ongoing situation right now. You can see the erosion is happening, and of course the inflation is definitely creeping up. So the dollar comes down, inflation going up itself is going to be a big issue, and if the GDP start to come down with unemployment coming down, it's going to hit a stagflation. So the S&P 500 now is showing a big thumb divergence. Yeah, the S&P 500 now, the percentage that's above the 20-day moving average is declining. That means that not every counter is doing well. So yes, indeed, the S&P is climbing, as you can see on the chart, but majority of the stocks are trading below their 20-day moving average. So which means that right now, there is only selective buying, and we all know they all belong to the Magnificent Seven. So once there's going to be any form of profit taking on them, especially Nvidia, we're going to have issue, because Nvidia now is a big elephant in the whole front. So we know that back then in 1999, for some of you are new in the market, there was a massive tech bubble back in 1999, whereby anything with .com was available, everybody buys. So now things after 20 years later, apparently the whole thing just repeat. So history do not repeat, but often rhymes. So where are we right now? Wow, we are back at the same point whereby with a tech bubble. So the thing is this right now, the Nasdaq is adjusted to the M2, indicates a massive tech bubble coming in, and it's going to be bigger than the one in front. And that is why Nvidia now is one counter that I want you to be very careful. Because if this actually do happen, we look at the Nasdaq, the Dow volume is declining, a divergence is happening while the market is going up, a pullback is actually very possible, and that's why traders have to be very careful. And the S&P total return level versus the Russell 2000 total return level, we're back to the same level again, and that is the same thing that we mentioned earlier. We're back to 1999. So the ratio of US large cap to the small cap is at the highest level since 1999, more than 3 standard deviation above the historical means. That means that right now, the market usually should be around this area here. Now it's like here itself. It's really high. And usually when that happens, you would expect a potential pullback of 5 to 10% to the market. And because of that, you can see that right now why Nvidia is one counter to be very careful. Nvidia have just crossed $180. That is crazy. And the thing is this, the PE ratio right now is at basically 58. Oh my God, the PE ratio at 58. And this counter now has 8.1% of the entire S&P. This is really high. Now, last year itself, when the thing was doing well, Apple was only 7.6. And back in 2006, we have Exxon, we have this Microsoft, and of course, back in the heydays, we have IBM. So now the S&P 500 is the one and only one that is now above 8%. So this is something from 1980 all the way to now. This is really a very high level. And of course, if you look at the P ratio, now it's at 58. Now, even Apple, the last been running, holding the fort, was at 38 to 31. But now it's at 58. So the thing is this, with it being at 8%, all right, in basically holds 8% weightage, all right, this is going to be a crazy time, all right, this is not going to be good. And when we have a counter that's dominating the S&P 500, usually that will be also the target board. And once they start to sell, that's going to be bad news. And of course, you can see the Nasdaq and the Bitcoin has a very incredible relationship, all right. It's almost that they work together hand in hand. Even when it pull back, it does the same. So the thing is this, if there's going to be a potential sell-off like what happened in 2007, then because of the alignment between BTC and NASDAQ, there is a possibility for the NASDAQ to fall while the Bitcoin to fall at the same time. So if you look at it right now, I believe that the NASDAQ may have to pull back to 21,000 before going up again, and that may actually break the Bitcoin down to 105. So it is possible that this might happen. All right, so traders, that's this. If it does happen, then it could be a buy signal up to there. So now we need to just tell ourselves, just go slow first. This is way too high. It's gonna be very dangerous for you to buy right now. Wait for a pullback, it'll make more sense. Yep. So guys, take note of this. I hope you enjoyed this video. Be careful for this 2 weeks itself. I expect a 5 to 10% pullback on the NASDAQ. So guys, hope they can make money on the market. It's Kel signing off. Take care and have a great time. Bye-bye.